Hey everyone, welcome back. I feel a little poopy doopy. Well, quite literally, actually. Uh, I think I caught whatever Jack and Max had last week for Thanksgiving. They were out for all of Thanksgiving. Like we had to cancel our Thanksgiving plans, and I'm like, all right, well, I guess it's an excuse to work. So I moved up getting the gold course done from like December. It was probably going to be closer to Christmas or right after, and got it all done last weekend. But anyway, now I think I have it. So I don't know what it is, but like I feel fine on the top half, but I feel pretty bad. I haven't got a single cup of coffee down in 4 days, which that's saying something, especially since I chug coffee basically. I live off coffee. So it's been a little weird, but it's kind of unfortunate timing also. Obviously I referral redeemed. It's no secret. I had a bunch of Tesla referrals, and so I referral redeemed a ticket, and I tried to get the Cybertruck thing reassigned to somebody else, but they're non-transferable, I guess. And so I've emailed them, I've texted people there. So I don't know if anybody has a connection and knows a way to actually transfer a ticket. I'm totally down to give it. I gave the +1 already because you can. Like that's the one I can give. I even put a different person's name in this ticket, and they still put my name in this Cybertruck ticket. Like I filled out the form for ticket number 1, put somebody else's email and somebody else's name. They deleted that person's info and put my stuff back on it. And I'm like, bro. So I thought there was a chance of this when obviously I was taking care of Jack and Max, but it sucks. So instead, I'll be here, which don't get me wrong, as much as I like streaming, I would also like to be there because if I could even get one question in, like we did at the annual shareholder meeting, I feel like it's a net positive to the community. But whatever. So I got some Topo Chico now. No vomiting though. It's really weird. It's just a bad time otherwise. So anyway, thanks for listening to that little intro. Starting a little bit earlier today. Let's get into some of the latest. So pre-market's green. This is an interesting list right here. So today we have PCE coming out, which is a big deal for the Fed. Like nobody else cares. Nobody on the internet really cares about PCE. Except maybe me. But anyway, so at 5:30, which is in about 34 minutes, if you're skipping around watching on replay, 34 minutes from now, we're going to get the release of initial jobless claims. Expecting 218,000, expecting personal income to come up 0.2%, personal spending to come up 2.2, real personal spending to come up 0.1, PCE deflator to be 0.1, PCE year over year to be 3.1, PCE core month over month to be 0.2. PCE core deflator year over year to be 3.5. We shall see. We'll also get pending home sales for October. I just want to be crystal clear about giving you the latest intel on real estate. October was a local bottom, 110%. Prices in certain areas definitely got whacked in October. In some areas, I saw a swing of about 10% in a month. Like you have active comps closing in September, August, July, and they're all like, oh yeah, this is worth 6. And then all of a sudden it's like people aren't selling and stuff selling for like, I don't know, 540 or whatever. And so you're seeing these, you saw that. Now the opposite is happening again because rates are coming down probably. So on a month over month basis, real estate is extremely volatile, especially with rates the way they are. Like people's sentiment is almost immediately reflected in the real estate market. And people don't think that. Part of the reason people don't think that is like when people make a decision to buy or not buy, you don't actually see that in the data for like 60 days usually. Mostly because like if you decide to buy, now you got to go find something to buy. Now you got to win the offer because there's competition. And then you have to close. And real estate is famous for delays. In fact, it's basically synonymous with delays. So yeah. Anyway, just make sure you clean the coffee pot. Gave you the download bug. Oh, that's interesting. Okay. Anyway, so so these are some of the numbers we'll be getting from an economic release point of view here soon. We also have this preview here. I thought this was interesting. I'm going to read some parts of it. October's personal income and outlays should show economic activity has cooled from Q3's torrid pace. This is a reference, obviously, to the GDP numbers that we saw, which I think, when do we get the new Atlanta Fed GDP numbers? The GDP numbers revised up to 5.2 for last quarter were nutty. Oh, today. So today we'll be getting the latest update on the Atlanta Fed real GDP now estimate. The latest estimate, I'll pull it up on screen here. Oh, look, Tesla's rising in pre-market. I want to be clear. I'm long Tesla. I am not hedged going into the Cybertruck event. I think Tesla has some catching up to do relative to like the Magnificent Seven. But every single Tesla event is buy the rumor, sell the news. So I would just, keep that in mind. I would love to be wrong, and I would love the stock to do fantastic things going into Q4 earnings, especially. But I'm not I don't hold my breath for these sorts of events. Although Elon gave us a pretty good. Oh, look at that! What the hell? Just as I say that, all of a sudden, there's like a giant red candlestick. Anyway, okay, I'm just gonna stop talking. So I'm gonna go to this screenshot here. So here we go. All right, so this is the Atlanta Fed data at the moment, which is based on it's about a week old now. I think this is actually it's about 8 days old. So the current estimate is that we're growing at about 2.1%. And Doomberg here suggests that personal income and outlays should show the economy is cooled. Moderating personal income growth likely weighed on consumer spending. I have a hard time believing that with the Black Friday sales we had. But honestly, maybe the CEO of a firm is right. Kyle, if you're having trouble accessing the live stream, send an email to us, staff@meetkevin.com. We'll take care of you today. Staff@meetkevin.com. The AI talk yesterday was scary. I don't believe that, honestly. Like I know that's a hope, but let's put GPT on like FSD timeframes, and I don't think it's going anywhere anytime soon. And don't get me wrong, like I'd love to. Actually, I don't know if you've noticed, but like the last 2 or 3 videos and the live streams I've been doing, I've decided to go 100% no clickbait. So it's just like, here's exactly what I think, and just like generic thumbnails or whatever. But don't get me wrong, it'd be probably entertaining to make some like doom and gloom videos about how like GPT is going to kill us all. I don't think so. It's not that smart. Like, it's really good at emulating a human, but when you use it regularly, which I do, there's so many times, like I've gotten so used to its weaknesses. I'm like, come on, man. Maybe I should make a video on some examples, but I don't think there's like some God complex they discovered. So I disagree on that one. I do think it helps promote the whole AI narrative of like, oh yeah, we should all invest more in AI. I mean, think about it. If the AI narrative is, oh my gosh, maybe GPT discovered something, guess what's going to happen? Everybody's going to go buy more NVIDIA chips because everybody's going to be like, holy crap. Whoa, they found something. We're going to go bankrupt if we don't invest billions of dollars too to try to find it as well. Let's invest. I guarantee you that's what's happening. Well, I guess I shouldn't say the word guarantee because then maybe I'll get in trouble. But I highly think there's a very high likelihood there's nothing scary, and that instead companies are probably, if anything, just going to dump more money into AI and this stuff. But anyway, back to this PC thing. So moderating personal incomes likely weighed on personal spending, suppress. Oh, I was going to talk about a firm. I'm all over the place. maybe the CEO of a firm is right in that more people use buy now, pay later during a recession. I personally got the hell away from a firm back in January of 2022 because I thought if we go into a recession, people are going to default on those loans. No, thank you. And I have to say, I'm going through credit applications for rental properties, and I'm seeing a lot more Affirm loans pop up. And I'll tell you, the people with the Affirm loans, their credit score is like 100 points lower on average. Totally anecdotal. Totally anecdotal. So don't quote me on it. I mean, I guess you could quote me if you really care to, but it's not like I'm pulling the statistic from any kind of actual research other than an anecdote. But it just seems like the BNPL borrowers have about 100-point lower score. So I wonder if the credit algos are beating up on the BNPL people a little bit. I'm not sure about that. Yesterday in the course member live stream, we were studying FICO a little bit. It's actually a public company, in case you didn't know, and the stock has been incredible. But anyway, they now use like your bank balances, your savings, your money market investments, all as part of potentially your default profile. It's really scary how much data those credit companies have. They know everything about you. Crazy. All right. So what does Bloomberg expect? Oh, see, I don't even feel good drinking water, man. Monthly headline PCE inflation likely decelerated to 0.1. Okay. Core inflation likely softened as well to 0.2. Okay, well, I just read this out. You just reiterating what the Wall Street consensus is. With the pace of hiring slowing and average weekly earnings declining, we estimate personal income grew just 0.1%. Yeah, it's just reiterating that. Bottom line, personal income should bolster the FOMC confidence that rates are already sufficiently restrictive. Well, I guess we'll find out. So we'll know that within the next 25 minutes here. Stage is set for a PCE slowdown. Interest payments are starting to squeeze consumer income. Oh, wow. Percent personal interest payments as a percentage of disposable income. Oh, yeah. Wow. Look at this. Let me pull this picture up. This is a good one. Yeah, so basically, disposable personal income, mind you, is a way of saying, what do you have left after you pay for your core spending, like your home, rent, car, basically just what do you have left to go be a consumer with? And at what point do you have nothing left to where the only thing that's left is essentially buy now, pay later options, which is happening. People are now putting their groceries on BNPL. And in a lot of these cases, it's not that people are like obsessed with debt. It's usually an income problem, which, I know it's easier said than done to bump your income, but that should be everybody's top priority, like always. And then, of course, once your income goes up, you start getting called a greedy capitalist on social media. But, what are you going to do? Anyway, so this is the interest payments as a percentage of disposable income. And you can see we're basically back at like 2006 levels here, which actually, is that 6? Hold on. If that's 2001, 2, 3, 4, 5, 6, 7, 8. That would be 2007-ish levels. Yeah, that's 2000. That's like Q1 2007 is roughly the level where we are now. That's not great. That could fall quickly, not because of a recession, but because of rates going down. So we're at Q2 2007, let's say, in terms of alignment. And then I'm going to make a little note here. Could decline either due to 1, recession and default, or 2, rates coming down. Pray. Oh, I remember when Pray came up on that little terminal code. Does anybody remember that? That was insane. And then the market started crashing right after that. That was just like one of the weirdest signs. And then SH9T was a good one too. Both of them highly accurate and should have been listened to. Whatever. All right. So let's see here. Disinflation will hasten rate cuts from the ECB. European inflation is falling faster than the ECB had expected, slowing to a 2.4% annual pace in November after peaking at 10.6% in October of 22. The central bank will struggle to insist on its higher for longer interest rate stance if the euro area economy continues to weaken as consumer prices ebb. This is interesting. So, Eurozone inflation is almost down to the central bank's. Wow. Consumer price. Is this just the generic consumer price CPI number, or is this, let me find out. Here, I'll show you this picture too. But I'm wondering if this is, here, let's write it down. So, Eurozone CPI. It just says CPI, so I shouldn't assume that it's core. I guess I could look up the Eurozone CPI really quick. I'll do that. But this is the chart I have for Europe. Okay, yeah, if I go to the European Union. Oh, wow. Really? Wow. Okay. All right, here, let me show you what I just read. That's really interesting. So let's throw a little text up here. So as of today, which we had data come out today in Europe, CPI, EU, harmonized month over month. I need to understand what that harmonized part is. They're harmonized standards, okay? But what about for CPI? Set of European consumer prices calculated according to a harmonized approach and a single set of definitions. Oh, for each country. Okay, all right. That makes sense. Okay, so month over month, harmonized CPI, negative 1.5%. Now, how much of that is driven by oil prices coming down, though? So do I have a core here? No. Oh, what a ripoff. Anyway, so it's negative 1.5% though. So that's pretty good. EU harmonized year over year, 1.4% versus 1.6% expected. And then CPI year over year, 1.4%. So that's interesting. Yeah, prices still trying to go down. Huh. I mean, I don't think it would be a bad thing to actually get your what's it called? Deflation in. Oh, it would help so many people to start seeing prices come down. That's crazy that they haven't. So okay. So what else? Let's see here. Let's go to top. Stocks gain before U.S. inflation data. Yeah, that's true. Let's go take a look at the sticks. Let's see what's moving. All right. I don't know what that 5 a.m. drop there was at Tesla. Oh. So purple. Oh man, just having these pants on is like killing my stomach. Ugh. That's it. We're taking them off. Okay. Wow. So Robinhood's up 3%. Okay. Somebody riddle me a thesis I have, and I'd like it's the chat's open, so let's have a conversation about this. Everybody thinks Coinbase is going to kill it when BTC is approved. Coinbase as an ETF. Coinbase makes money off transactions. If transactions go to ETFs, would it not be brokerages that make money, like Robinhood or otherwise, and market makers, versus Coinbase? Because would the underlying BTC actually need to trade regularly, or can you just move the ETF units around? And who says the underlying needs to be at Coinbase? You know, the underlying could be somewhere else. So I don't know. It's just an interesting question or thought I had. So something to think about. Well, Ellis here says Coinbase will be the custodian. That's the assumption. You're assuming that only Coinbase could be the custodian. But if a crypto ETF is approved, theoretically, any bank could be the custodian. Any bank. Theoretically, a broker-dealer could custody the assets. It does not have to be Coinbase. People assume Coinbase because right now it's like the easiest institutional connection. But if you approve, somebody says the audio is pausing every 3 to 5 seconds. I don't think that's us, is it? But if the BTC ETF is approved, I think the amount of custody banks will skyrocket. Somebody here says Coinbase goes up. Coinbase goes up in direct correlation when BTC goes up. Well, it does because people assume that more people are going to transact. Right? It's all about transaction. Hold on. Okay, I want to hear your thoughts on this, but I'm going to listen to this. I'm sorry. I'll be right back.
The way it's been portrayed is a hoax.
I haven't endorsed anyone for president. I mean, I wanted to hear what Vivek had to say because I think some of his things some of the things he says I think are pretty solid. He's concerned about government overreach, about government control of information. The degree to which old Twitter was basically a sock puppet of the government was ridiculous.
Could you see yourself voting for President Biden? If it's a Biden-Trump election, for example?
I think I would not vote for Biden.
You'd vote for Trump?
I'm not saying I'd vote for Trump, but I mean, this is definitely a difficult choice here.
Oh, that may be the choice. Joining us right now, Jay Clayton, former Securities and Exchange Commission chairman and CNBC contributor, and somebody who should say, I want to get your thoughts just for reacting to that. But you also brought a suit and ultimately settled a suit against Mr. Musk.
Well, look, congratulations on an amazing day and an amazing interview with Musk.
Thank you.
And maybe start with his comments on ESG.
What was interesting about that was the sort of ESG piece of it. Mm-hmm. And sort of how he thinks about ESG and how he thinks about the climate, and then how he's politically, I think, has moved to the right, in part because he feels, right, that the Democrats and the Biden administration have not been as generous and kind in spirit about his own accomplishments and Tesla's success.
More than that, though.
No, but I think it impacts him deeply. And then I think there's some views about what he would describe as the woke mind virus and other things around free speech.
You heard what he said about old Twitter. I mean, that was unbelievable what he said. He said it was a megaphone for the Democratic Party.
Right. No, and that was
just said exactly.
Well, let's go to something I hope I know a little bit about, which is regulation. And your dialogue with him around regulation, I thought was pretty remarkable, because he said a couple things. He said, one, look, I'm remarkably compliant across my companies with oceans of regulation. There are some that I disagree with. And what I think he was saying, and we can go back to the SEC, was, look, what is the purpose of regulation, and where is the Biden administration going with regulation? Is it regulation for regulation's sake, or regulation to further mankind? And there's no doubt that he feels that he genuinely is trying to further mankind.
Right.
And that where regulation is in the way of that, he says, look, I should not, I'll try to follow it, but I shouldn't have respect for regulation that is really there.
Right. But here's the thing. He did not appreciate what you were doing at the time. Right?
I don't think anyone doubts that he violated the securities laws.
But here's a question for you, and this is the thing I think everyone was grappling with. And I tried to grapple with him, and you try to meet people where they are. Mm-hmm. He said, I don't care about being liked or disliked, and that's it. Or, hate me, that's fine. Mm-hmm. But what I kept trying to go back to is the idea of trust. I assume that somebody like Elon Musk has to be trusted, ultimately, for all of these businesses to work, for advertisers to advertise on X, for you to decide to buy a Tesla vehicle, for the government to decide to work with SpaceX and all of it. And the question, because this goes to rules, laws, how do you think about that in him?
Well, let's look at the market and what the market says about trust. And I'm not going to go to the financial markets. Let's look at the market for engineers. if you talk to engineers, people who want to be involved,
they want to work for him.
They want to work for him.
They do.
If you want to work in aerospace, if you want to be a rocket scientist, you want to be the cutting edge of ingenuity, you want to work for him. If you want to be in artificial intelligence,
you want to work with
him. Want to work with him. Now, talk about trust.
The guy's not wrong.
That's your career. That's your putting bread on the table. That's your what I would say is your accomplishments as a human being, what you spend all the time in. That's a remarkable state of affairs.
Great answer. It was a great answer, Andrew, because I saw where you're going, because you go there here a lot about.
Okay, so quickly, first of all, I agree with this speaker and what I heard about the Elon thing with regulation and furthering mankind. Completely agree with that. And I totally think that's why people love working for Elon. It's like, it's the mission. It's a human mission. But going back to Coinbase here for a moment, there's this comment here. Coinbase wins from a regulatory standpoint. I just want to stop there for a moment. What makes you think that? Aren't they like sued like up the wazoo by the SEC and constantly fighting over, the definition of a security and this, that, or whatever? I mean, let's go to their Coinbase investor relations. And let's go to their SEC filings. Let's just fact check it. I don't know. Maybe my memory's wrong. I forget stuff all the time, so I just look. So if I just type in, let's go to risk factors. So risk factors are on page 21 of the Coinbase statement, and there's a summary. Operating results may fluctuate. Revenue is dependent on the price of crypto assets. Transaction revenue, meaningful connection from Bitcoin and Ethereum. In the past, we have entered into partnerships which could fail. Interest rates fluctuate. Future development of crypto is subject to variability. Cyber attacks. Okay. We are subject to an extensive, highly evolving, and uncertain regulatory landscape, and adverse changes to or failure to comply with any laws or regulation could affect the brand. Okay, that's fine. We operate in a highly competitive industry. Yeah, that's true. Compete against a growing number of decentralized, non-custodial platforms. We are and may continue to be subject to material litigation, including class action lawsuits. I mean, every business is. Okay, here. A particular asset's status as a security is subject to a high degree of uncertainty. We rely on third parties, blah, 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 blah. I'm pretty sure somewhere in here there's the SEC complaint, but I'll keep exploring that. So, but it's an interesting idea. Let's see, Coinbase. Oh yeah, okay, here we go. Oh well, here's an update. Let's see. Oh yeah, U.S. SEC. This is from October 3rd. U.S. SEC asked judge to deny Coinbase motion to dismiss its lawsuit. The SEC on Tuesday asked a federal judge to deny Coinbase's motion. The agency said Coinbase was wrong to rely on a recent court ruling that found XRP did not violate security rules. Tuesday's filing showed that the SEC is seizing on Terraform Labs ruling to raise questions about the ruling in the Ripple case. Blah, blah, blah. Anyway, the SEC sued Coinbase in June, accusing it of operating illegally as a national securities exchange, broker, and clearing agency without registering with the regulator. So after having read that, I just want to go back to your first 5 words here, 6 words. Coinbase wins from a regulatory standpoint. Okay, so when I line that with this, I don't think you're right. Maybe that may be true in the future, but I don't think there could be a guarantee of that. They seem to be the only shop who plays by the rules. I don't think so. I mean, at least not what the SEC is alleging. So consider that. Like, if BTC is approved by an ETF, every single broker dealer like that could decide we want to custody crypto. Just saying. Oh, that's really interesting, Tim. Tim, I want to hear why, as an electrical engineer, you would not want to work with Elon, but you still like Elon. Do you just think it'd be like an erratic workplace or something? Or what do you think? Elon speaks to the people. He wants to target for sure. Well, that's true. That is true. Like the culture of working for Elon, I think, is specific. Robin is probably a safer bet for crypto, funny enough. They just got approval to do business overseas. A lot of people get mad at that idea because of this fear of, not your keys, not your crypto. I wonder if is the Robinhood crypto SIPC insured? Because if it is, that would be really interesting. Crypto positions are not SIPC insured. Okay, so they're not actually insured. So basically, your crypto is only as safe as Robinhood not going bankrupt. Worth noting. Okay. I had to help design some substations for Tesla and in Nevada, and they were awful to work with. Oh, I'm sorry to hear that. It's a long time ago. Being sued doesn't necessarily mean they're wrong. No, of course not. But like, if you're in the middle of a lawsuit with the SEC, and the SEC is the one deciding whether or not to clear BTC approvals, the SEC literally has the power to say, everybody can do Bitcoin ETFs except Coinbase because we're in a lawsuit with them. Theoretically, right? Like, they have a lot of power. People forget how much power the alphabet organizations have. You know, whether it's right or not. Somebody here says Coinbase has listed many scam coins. I think there was a race in 21 just to list everything. Like, I think the due diligence desks were like non-existent. You know, I was talking to an attorney. A book came out that talks about how Taylor Swift signed a $100 million contract to advertise FTX, but Sam Bankman-Fried didn't sign it, allegedly because he was too busy playing video games. Some people were saying, but anyway, basically, he didn't sign his end by the time the company went bankrupt. And I guess Taylor Swift's team was furious about losing the $100 million contract. In hindsight, they're probably very happy. He seems too intense for my taste. Oh, that's interesting. That is true. You can transfer off Robinhood now. We want a regular update on the twins. Okay. I'm down to make a video. They are great. They actually feel like babies now. You know, when they were little preemies, they were so tiny that they felt like they still belonged in the womb, which I suppose technically they did. But now they actually feel like newborns. Bay Area engineer here. Elon is erratic and could lay you off on a dime. He expects you to treat Tesla like it's your company, but you're just an employee. I love Tesla, but I wouldn't work for it. Interesting. I mean, to some extent, having an ownership mentality at the company you work for is a good thing, right? It helps you advance and potentially in your career or stock options you'd benefit from. SEC waits to file against Coinbase until after the L against Ripple and before they approve the ETF. I think the Ripple L actually came after that SEC lawsuit, but I'm not sure. So, okay. So, well, yeah, you know, somebody's talking about my sickness. Like, my top half feels fine. Like, I feel no illness at all in my head. I just wish I could have coffee, but every time I have sips of coffee, I feel nauseous or nauseated. I don't know which one's the right one. Grammar. Anyway. Yeah. All right. So let's take a look here. Oh, thanks, Haas. Okay, Ulta here as a computer engineer. I think working for Elon would be hell, but I think it would be the most rewarding professional experience ever. Oh, interesting. That's an interesting way to put it. Okay, so yeah, here's Ulta. It just broke through. What is that? It's 100-day moving average, and it's like almost exactly at 420. Yes, more children. Yep, PCE comes out in just a moment. Yes, Andre, PCE. We're gonna cover it in 3 minutes. What we'll do is we'll watch the NASDAQ move. Let's listen in here for a moment.
To the University of Michigan, more than $160 million to Stanford University, and over $125 million to the University of California, Santa Barbara.
All I had to do was not give away the Berkshire stock I've given to various institutions.
Do you wish you hadn't given it to him?
No.
Okay.
Yeah. I don't like crazy leftism and liberal arts part of colleges.
Yeah.
And I'm more suspicious about capitalism with all hardship removed.
Right.
I think it's dangerous to remove all the hardship for communism, expecting to work perfectly.
Yeah.
For capitalism. It's the goddamn engine is the hardship.
Right.
We were basically saying to a 17-year-old kid when he graduated from public high school, we give you the high road to the kingdom, George. And we hope you do well. Goodbye. And there he is. He can either be homeless Or you can
A
go
lot of respect to Becky for sitting down next to him so he didn't have to speak as hard. That's so cool.
you go to college or you go to work. It's absolutely required. It's a tough love system. I'm not sure that capitalism doesn't need big, strong elements of tough love in it.
Charlie has spoken a lot in the past about why capitalism is the best system, why it works. And again, that was just him talking about why you need a little tough love in it as well.
She's awesome. Okay, so we're 1 minute away from PCE. Here are the custodians. You can see Coinbase is listed 4 times as a custodian. You do have Wisdom Tree wanting to be its own custodian, Fidelity wanting to be its own custodian, and some of these apps like Valkyrie and Global X and VanEck, they have not yet provided a custodian. Now, keep in mind, these there is, like, if the SEC really hated Coinbase, they could literally say, we'll approve Fidelities and Wisdom Trees, but not Coinbases. Just saying. Like, you piss off the SEC, man, it's not a good idea. So, anyway. All right, y'all ready for PCE numbers here? Come on, baby. Give me some juice. I want some good numbers. Good numbers. I'll take a match. I'll take a match. We're looking for core. Core is the big one. We're looking for 0.2. Come on, baby. Come on. Any second now. Any second now. Here we go. Here we go. Here we go. Come on. Okay, this is the time. Let's go. And okay, personal income 0.2, personal spending 0.2 as expected. Okay. 218 as expected on initial claims. No PCE yet. Come on, baby. Come on. Give it to us. Continuing claims popped like 60,000. Okay, here we go. Core comes in at 0.2. Year-over-year matches 3.5. A match on the core. How personal spending comes in at 0.2, though. A PCE deflator comes in a little lower than expected at 0. We are now at PCE deflator 0. No inflation month over month, including energy and food for the month over month. And then the year over year comes in with a miss as well at 3% as opposed to 3.1. So that is good. That is a good read here. And the fact that the continuing claims just shot up about 62,000 is probably a red flag to the SEC, to the Fed, that we've done enough here. So once again, core deflator year over year 3.5 as expected. Core deflator month over month 0.2 as expected. So the core numbers came in as expected. The continuing claims number came in higher than expected with a match on initial jobless claims. So more people staying on unemployment. Continuing claims, by the way, are a way of saying it's harder for people who first filed unemployment to get off of unemployment. So that's a poopsie doopsie issue. Okay, I got to stop using poopsie references. Anyway, you did just have real personal spending get revised down by 0.1% from the prior read, and prior personal income actually got revised up to 0.4%. Those numbers not so important. Big numbers here are that the PCE core numbers came in as expected, and the non-core numbers, so the headline numbers, came in 1/10 lower than expected. But again, you're seeing more of those continuing claims, and that could weigh on the markets, mostly because people start thinking, if the joblessness is starting to stick, maybe the Fed's already gone too far and we're screwed. It's possible. That's the big fear right now, is that people believe the Fed's next, and I think it's possible too, the Fed's next big mistake could be going too aggressive here, staying too aggressive for too long, to where the cycle of unemployment becomes really bad. Canada's GDP just came in. Q3 annualized GDP, negative 1.1%. You've got real GDP, negative 0.3% versus Q2. Try to see here. Let me get the actual Canada sheet here. All right. So Canada. Oh, Canada. Quarterly GDP annualized negative 1.1%. Oh, okay, sorry, that was the GDP read, not CPI read. Negative 1.1. So the economy in contraction there on an annualized basis. Wow, that's way worse than expected. The expectation was 0.1%. Canada comes in with negative 1.1%. That's an economy in recession. I mean, you need 2 quarters in a row of that. But let's look here. Canada, that's a red flag to America too. Now, the real estate market has been hit a lot harder in Canada because you don't have the 30-year fixed. Let's see if I can get a chart of this. So the latest read, in GDP annualized was also negative in the September read. Interesting. So, but was that the initial read? We'll have to TBD on that. We'll come back to the Canada one. I'm not so familiar with the Canadian numbers. But anyway, again, U.S. headline slightly softer than expected, which is good. And then let's listen in to see what they're saying here.
And leave home.
All right, great. Thanks, Rick. For more on the data, let's bring in Bharat Ramamurthy, former Deputy Director, the White House National Economic Council, Douglas Holtz-Eakin. He served as Director of the Office of Management and Budget and is now the President of the American Action Forum. And it's good to have you both on it. And Bharat, let me ask you at this point, can you, I was trying to get to that lagging indicator, if you would, on the revised GDP. Are we in a 5.2% economy right now?
Q2 Canada was negative 0.2%. Now it's negative 1.1%, both annualized. So that means this is probably you're in recession in Canada.
A little bit, and reflecting based on the numbers that we got today, where we are and where we have come from since January of 2021. I remember sitting in the White House right after the inauguration, looking at the fact that we had less than 1% of the population vaccinated. We had an unemployment rate over 6%, and people across the board were projecting that we would have a long and slow and grinding recovery. And instead, here we are in November of 2023. We've just come off a quarter of over 5% economic growth. Inflation has been coming down towards target. We've got 20 straight months of unemployment under 4%. I think there's a lot of reason for optimism, even if the economy isn't going to be growing at 5% quarter after quarter.
Be that as it may, Doug, I mean, we know how people feel, and we see it in the polls. So I understand what Bharat wants to point out, some of the good things the administration has accomplished. But where are we in the economic cycle, in your view, Doug?
Well, I think the third quarter GDP number is pretty misleading about the underlying strength in the economy. A lot of that was driven by a big push in government spending, 9/10 of a percentage point, big inventory move, 1.4 percentage points. If you look at core private demand, it's about 2.9 percentage points, almost all at households. And that concerns me because every post-war recession, other than the pandemic, was led by a downturn in business fixed investment. So keeping an eye on the business sector is the key. It's essentially flat in the third quarter. The durable goods orders haven't been very strong. And so we've been held up by the households. But how did they do it? Real disposable income hasn't been growing. It's been dead flat over the past couple quarters. Savings rates dropped by 2 percentage points since May. That feels like a household sector on fumes and a business sector that's not.
I don't know, man. It says here, well, is that real? Let me see. Hold on.
Gentlemen, I want to play you something and just get your reaction if I could. This is Vice President Harris and what she said yesterday at the DealBook Summit about inflation. Take a listen.
Economic measures and don't necessarily connect with the heart and the experience and the feelings of the American people. For many Americans, prices are still too high, and we still have work to do to address that.
What do you think of that, Doug?
Well, I think that's actually dead on the mark. People are celebrating what a great progress we made on inflation, but if you look at sort of core PCE as the benchmark, that peaked at about 5.6%. We're now down to 3.5%. That's great, but That's halfway home. That's not the finishing stretch.
Right.
That's halfway to the 2% target. So, when I read the Fed minutes and the staff outlook is we'll get to 2% in 2026, that tells you have a lot of battle with inflation left.
Well, first of all, what Fed target has been correct? A. And B, this guy said real personal incomes were flat. In fairness, they're close to flat. So I don't know if he's just exaggerating a little bit, but they're usually around, 2.6 at a low to like 3.5% for real inflation adjusted personal income. It's gone positive here, not by much, but I mean, look at that. You had 2.25 in June. You're at about 1.24 now. I'm not saying this is good. It's not. It's still low compared to what it was, but it's positive again compared to the percent change in 2022. So sometimes I think they get these people on these shows for hyperbole or something.
I would project that a year from now, people's views on the economy will be a lot stronger than they are right now.
That's true. I believe that.
And Douglas Holtz-Aiken.
Which that's actually a good thing for Biden.
To do, but we appreciate both of you.
Yeah, among those things we have to do, people we have to see, we've got Jason Trennert from.
Yeah, I think it's so, like, I don't know. There's so much emotion on the internet. I'm just going to try to keep saying what I think. This election is purely going to come down to the economy, how people feel, how many people are unemployed, and what's inflation doing. And right now, continuing claims being up 60,000, not great. However, the rate of inflation seems to be falling. We keep getting misses, which is great. Continuing claims, we can actually look at a chart of this over time. It'd kind of be interesting. Maybe we could go all the way back to I don't know. Let's see. Let's try to go back to the 1980s. Oh, interesting. Okay. So this brings me all the way back to 1980. Let me go back to more. 1975. Ooh. How interesting. Boy, COVID really ruined the graph, man. So I think you're going to like this chart. Well, because it's fascinating. I haven't made any conclusions yet. So, all right, here we go. Okay, so on screen right here, I'll hide myself for a second. Here's where continuing claims sit right now at 1.9 million. So what we have to do is we have to try to create a straight line all the way across for like 50 years of unemployment claims. Let's try to align that. There we go. Okay, look at that. We made a nice horizontal. Our peak right now in unemployment claims post-COVID is consistent with, it's a little higher than 2018-19, but it's certainly lower than 16, 15, 14, 13, 12, I mean, everything. It's lower than leading up to, and you want it to be lower, right? Let's be clear about that. You want this chart to be low. And it is lower than everything basically after the recession, the Great Recession leading up to 2016. It's also lower than during the boom time of 2004, 5, and 6. That's crazy. It's lower than the entire decade of the 90s, 80s, just touching about right there, and mid-70s. So yeah, sure, it's rising, but which is a red flag to the Fed to like chill. But it is interesting that at this point, it hasn't broken yet. Now, if this goes up more, let's say we get to 2. So where's 2 on this? That line you see on the right, that notch is 2.5, which would be about, I don't know, call it 20% more. So 20% more unemployment claims, and you'd still kind of be average. So there's a lot of labor slack with how low we are historically. Interesting chart. That doesn't mean it can't skyrocket. I mean, look what happened during COVID, or look how rapidly it rose over here in 2008. You know, we might realistically be something like that, you know, and then this is when it becomes self-fulfilling or self-sustaining. We're like, okay, so many layoffs, more layoffs, more layoffs, more layoffs, and then everybody's laying people off. That's really bad. This right here is the mistake that the Fed wants to avoid. You didn't even have it that bad in 82 and 80. Wow. That's crazy. All right. Okay. Let's see how the markets. Yeah, a lot of people keep asking me about Dish TV. I think it's a value trap. Massively indebted, if I remember correctly. Oh, I'm so tired. I wish I had coffee. I can't do it. I'm going to get sick. All right. So, pre-market here, Coinbase down about 1/3%. But otherwise, I haven't seen anyone argue my Coinbase thesis, by the way. Like, well, more so than I did. Cybertruck event will probably be at technically 1 p.m. Austin time. So that would actually be California time. That would be 11 a.m. Oh, so my stream's too early. I should set that to 10. I have the Cybertruck live stream scheduled. I'm going to push it to 10. Maybe we'll start earlier, so I'll put it at like 10:30 right now. But yeah, if you want to hit the little remind button for the Cybertruck live stream, not a bad idea. And it's on this channel. We'll be streaming it on this channel. Obviously, we're going to go into the market open here, and we'll cover some of the other topics I got to get to. But okay, so that's good on PCE, though. Let me just see if there were any other revisions posted. Oh, I have the actual PCE too, the actual report. Let's look at that just to see if there are any devils in the details, so to speak. I always love checking the details. Oh, yeah, cool. Yeah, the Cybertruck, the cyber event link is available. I'll, you know what I'll do is I'll put it here. Set reminder for Cybertruck event. Here you go. There you go. Okay, cool. So yeah, in case you haven't been following, I'm going to go live every single day to the best of my abilities when the market is open. I'm trying to start a streak again, kind of like we had years ago. I know it's less popular now, but honestly, I really enjoy it. So I want to do it, and people seem to like it. So it's the best of odds, win-win. All right, let's look at the actual PCE report here. Remember, you know, in yesterday's live, somebody was complaining about what was it called? The CPI health insurance adjustment, which was the non-seasonally adjusted year over year, which, you know, was because of the formula change. But again, when it's non-seasonally adjusted, which we generally use the NSAs, it's going to be wild. All right. So what do we have on the PCE here, though? Okay, we already read the numbers. We know the headlines, but what are the deets? So $41.2 billion increase in the current dollar personal consumption expenditures reflected an increase of, oh, wow, look at that, $53.1 billion in spending, offset by an $11.9 billion decrease in goods. Wow. That goes to show you the only place people are spending positive spending is services. Is services or are services? Anyway. Within services, the larger contributors to the increase were healthcare, led by hospitals and nursing homes, housing and utilities, led by housing, which we've been waiting forever for that crap to come down. I think it finally is. And international travel. Those are your pain points right now. Within goods, the largest decrease were Tesla cars. Oh, sorry, that says motor vehicles. And parts, as well as gas. Personal outlays. personal saving was 768 billion in October. The personal savings rate, wow, bro, holy smokes, 3.8%. That's good. Really? It feels rigged. Let me compare it. St. Louis Fred personal savings rate. Maybe I'm mistaking this. So I always have to fact check myself. I don't know why that feels high. I could be wrong. So personal savings rate. All right. Yeah, okay, never mind. It's not that great. It just surprised it's still as positive as it is. So here you can see 3.8. It's basically a little bit up from last month, but it's down from the summer. And if you look at history, yeah, okay. We used to be at like a 5 to 6% rate. All right. So 95, we had almost a 10% savings rate. .com bubble era, we were really low. Bubble era, we were like 2.5%. Nobody saved anything. Wow, very interesting. Okay, let's go back to this. Okay, here we go. So from the preceding month, the PCE price index for October increased less than 0.1%. Prices for goods decreased. Wow, deflation on goods. Let's go. Prices for goods decreased 0.3% and services increased 0.2%. So that's how you get that average. Okay, interesting. Food prices increased 0.2. Energy prices down 2.6. Core was 0.2. Okay. Here we go. Within services, the largest increases were international travel. I mean, this is a reiteration here. And accommodations. Nursing homes, hospital, international travel accommodations. Okay. Anything else? Is that it? That's it. Okay. Good to know. So that's PCE. Let's listen in here for a moment.
New model that everybody was kind of worried about. The board never even got this letter that employees said they wrote about that. So no, it's not that. This has to do with, I think, this is a little bit of speculation based on reporting, but I think that it has to do with Sam Altman involved in lots of other business dealings, and then the board feeling like he wasn't being honest with them, and that's what they're sort of looking into now. And I don't know if there's anything there. There's definitely not a smoking gun.
Okay, Reed, we appreciate it. What stays in Vegas, at least while you're there, won't stay, or what happens in Vegas won't stay, hopefully. So report it out and let us know what happens. We'll talk to you soon. Thanks.
Will do. Thanks.
All right. So stock futures rise on Fed-friendly economic data. Futures rose after economic data bolstered speculation that monetary policy is tight enough to allow the Fed to stop hiking. Okay. So if that's true, then the 10-year should be down. It's up. What the heck? You just can't understand. It's not, you know what? It's not meant to be understood. It's just not meant to be understood. It's that simple, folks. The 10-year's up 3.2 basis points because that makes sense, right? Not. All right. Stock futures rose after economic data bolstered speculation that monetary policy is tight enough. Okay. S&P contracts signaled the benchmark gauge will extend a rally that drove the gauge less than 5% away from its all-time high. Trading volume might be higher than usual on Thursday. 2-year treasuries, more sensitive to imminent policy moves, wavered near 4.65. Inflation-adjusted personal spending rose 0.2. We saw that. Oh, no way. Oh, this is interesting. Economic Regime Index indicates the worst of America's economic pain may have passed. The index dropped back into recession territory last month after showing nearly a full rebound earlier this year from its trough in late 22. While the model signals potential economic weakness ahead. As long as it stays above its lows, the outlook is favorable for the S&P 500. Well, how am I supposed to look at this chart? I'll put up a screenshot of this. This is quite a bizarre chart. I'll take a second. Economic regime index. Oh, I mean, that looks pretty close to the hole to me. This is a bizarro little chart. All right, give me a sec to pull it. It's basically trying to say, if you're at 1.0, you're in recession. And wait, no. Is it? No, when you go negative. Yeah, you want it to be positive. Okay, all right, I get it. Bizarre. Some other Doomburger fear chart here. So as you can see, when this white line is high, no economic pain ahead, theoretically. Then it starts deteriorating. Like here, it started deteriorating into, what is that? 78. Yeah, a lot of deterioration here into 78. Rapid deterioration into 90. Rapid deterioration into a dot-com bubble. Rapid deterioration here in 07. And this has been very volatile. What a weird deterioration. See, it hasn't been a traditional, like, straight down, straight up. Look at that. That's almost straight down, straight up. This one had a little zigzag in it. Almost like, yeah, that's an interesting one. Dot-com bubble. I don't know how that had a zig in it too. And so did that. I don't know how useful this is. But anyway, they're saying, oh, don't worry. We are away from that line right there. Okay. Yeah, that really makes me comfortable. Don't worry. You're not at 0. You're actually at 0.04. Stupid. Whatever.
Next year, the earnings expectations are for up 12, revenues up.
Dude, none of this poor guy's brand is actually visible. His head blocks it. The crop blocks it. His entire brand is blocked. What a rip.
The Fed funds rate doesn't have a rounded top. As Art Cashin says, it takes the stairs on the way up and the elevator on the way down. So that's the only kind of hesitation I have. It's just that people are really calling for an almost perfect scenario where you get a slowdown in inflation, but still very rapid earnings growth. And I think that might be a hard thing to pull off in 2024.
Look, I'll go back to this. I know you have been in this camp of thinking that things were going to come down for a long time. The market has evaded any sense of coming back down. But I will also say, back to Jamie Dimon, when he spoke with Andrew yesterday at DealBook, he was pretty concerned about the idea that this could be a sugar high. Is that what you're kind of buying into? Because when Jamie Dimon says things like that, I certainly sit up and pay attention.
Well, certainly, listen, and I don't want to make this overly political, but this administration is pulling out every rabbit out of a hat it can, whether it's the Strategic Petroleum Reserve, whether it's the bank lending facility after Silicon Valley Bank, whether it's the fact that we're running a budget deficit that's close to 6% of GDP at full employment, which has never happened in the post-war period. The only period we've had, the only times we've run deficits this high were when the unemployment rate was already over 7, and the unemployment rate is now under 4. So, if we're not for the government being so munificent or incontinent, depending on how you describe it, it seems to me it would be a tougher. The economy would be in tougher shape than it is right now. And you have student loans, you have the employee retention tax credit. I mean, there are a lot of things being thrown at the economy to keep it out of recession at any cost. My only issue is that comes with a cost, right? And generally speaking, over time, the cost is higher inflation.
So what are you doing? Are you sitting on the sidelines? Are you waiting for a pullback? Are you investing in areas that you think will do okay anyway?
Yeah, no, I think, and listen, we haven't had a wholesale, we've been certainly cautious and bearish, but I mean, we've also been focusing on areas of sectors of the economy that are not up nearly as much as tech or the Magnificent Seven, but do have a very positive spread between their earnings weight and their market cap weight in the index. So financials and energy, as an example, financials, I think going into next year could be interesting place to be. We haven't been overweight that this year, but we've been overweight energy. And there are very big differences in terms of the bang you get for your buck in the index. Whereas if you look at the Magnificent Seven and you made it a separate sector, it would be 28% of the S&P 500, but only 17% of the earnings. Whereas if you look at energy, energy is only about 4.5% of the index, but it's about 12% of the earnings. And so from my perspective, going into next year, that's where we would like to be. We want to be in places where, again, you're getting more bang for the buck
Energy?
as far as the weightings in the overall index.
Like energy.
Yeah.
Like energy a lot. I think, and I know it's part of the reason why I like it is that I believe, just based on my travels, and especially abroad, it is institutionally underowned. No one owns it. That's partly for political reasons. It's partly because in the past, those companies tend to light money on fire. But I think it's different now. I think there's a lot of new capital discipline among the majors, the public majors, that I haven't seen in my lifetime. And they're very focused on return on equity and returning money to shareholders. That's a big difference. The other thing that's interesting about energy is that it tends to be counter-cyclical as far as regulatory oversight is concerned, which is to say they tend to do better during periods of intense regulatory oversight. The stocks do better.
Right.
Donald Trump loved the energy sector, and they were terrible. Biden hates it, and they've been terrific since he was elected.
I wonder how much of that had to do with other factors, though, like inflationary factors and geopolitical turmoil like Russia. But anyway, let's take a look at this. Oh, hold on. Fed speak. Oh, boy. Still too early to know if the Fed is done raising rates. What's she doing in Germany? Germany's Börsenzeitung. Should take our time now, remain vigilant, need to better understand what is happening with the economy and inflation, need to be prepared to either raise rates again if necessary or say tightening cycle is complete if that's appropriate. Oh, that's interesting. She's kind of saying like, hey, like if we're going to say it's complete, let's say it. Latest inflation data is encouraging, but we must not prematurely declare victory. Currently on the way to temporarily reaching 2%, but not interested in temporary price stability. Ooh, that's an interesting way to say. Not interested in temporary price stability. Don't want to repeat the same mistake of the 70s. A lot of information coming before the December meeting. Not willing to take anything off the table. Policy is in a very good place. People's fear of recession has faded into the background. Hearing more and more that it's harder for companies to pass along rising prices. I'm not thinking about rate cuts at all right now. Economy needs to cool down a little more. Can continue reducing balance sheet even after rate hikes are done. Stalling progress on inflation, further rate hikes are not our base case. If they're stalling progress on inflation, right? Okay. All right. I don't know that that was really much news, but it is news. Bro, chill, man. You don't need to say, damn, Kevin, you were so wrong. You know, I already pulled up the chart of ARK and the other ones filing with Coinbase for their custody. And if you got to that point of the video before complaining, you would have seen that I also said the SEC could theoretically just choose to approve the BTC ETFs with the custodian they want, like Fidelity. Like, let's say they're like, you know what? We don't want Coinbase, so anybody with a Coinbase custodian needs to refile. They have the power to do that. So come on, man. Wake up before you start bitching. All right. So let's take a look at this. Rise in continuing claims. Masks receding recession risk. Oh, interesting. So this person here this suit, oh boy, I feel sick again. This suit suggests that the percentage of states with rising claims is falling, which is actually a non-recessionary risk. However, we are above the recession threshold, the yellow line. That's interesting. All right, let's go back to here.
Really like General Mills stock. You see, like, you see the piece of paper we bought, never to be touched again. And that
said, Jim, you did mention sort of back to the supply demand concerns that did occupy a lot of our conversation. It's not as though they've gone away.
No.
The budget deficits are still very large. They're still going to be need to be met by significant issuance.
Right.
And so it's not as though this issue is, it may be quieter now. And even looking at the interest costs, they probably come down by something decent, but it's not insignificant.
No, and again, this is a halcyon. Maybe this is a halcyon moment within what could be a tsunami of just an overload of treasuries. But I mean, Carl, the one thing I think that people didn't expect right here is just a series of excellent reports on almost everything. And to go back, I like to go back to the second largest retailer in the country, Costco. The deflation continues in so many different categories. We are at a moment where that's actual decline, not a slowdown in inflation, actual decline. And that's what Jay Powell's looking for. He's not happy with the slowdown in inflation. When we listen to Vice President Harris at Andrew's incredible one-man conference, they just keep talking about how we haven't been able to tell the story of because prices have gone up, the working person feels very stretched. This may be the beginning of when prices actually go down. We're seeing Costco actually lower prices for things. Oddly, Hormel yesterday was a disaster.
Yep.
Why? Because turkey prices went down so much they couldn't pass it on. I don't want to be too granular, but food has crushed us. Okay, housing has crushed us, and cars have crushed us. And I could say the same thing about Biden. Those crushed Biden, and those have to reverse for Biden to have a shot. Now I mean that the drug rollbacks aren't going to happen until 2026, and the drug rollbacks are very significant. But they need to have a win, and they may be getting one here for the first time when we start seeing the Costco numbers, start seeing food numbers. Food's finally coming down.
Yeah. Food, certainly single family new homes are down double digits year on year. I know Nick Timrose of the Journal, Jim, tweeted the 6-month annualized core PCE is 2.5, not far from target. 6 months ago, it was 4.5.
And I think I'm trying to figure out whether Powell wants 6 months of good data or do we just get 6 months of good data. But I still keep hearing, David, the cut and rates. And
I'm sorry, what about the cut
people
rates?
still talk about interest rates are going to be cut.
Yeah, although, I mean, not all of them.
But I would
hear Daly is saying I'm not thinking about rate cuts at all right now.
Right, but I would tell you, we don't want them. If you're bull, you don't want them.
Yeah.
Because the longer this lasts, where we wait, that's the single best time to buy stocks. Waiting. Once they start cutting, no, that means something's wrong. So enjoy this period.
I know you've been vocal, Jim, about Salesforce. We're going to see it here at the top of the gainers list.
Yeah.
People are talking about a new chapter here for the company.
Well, Mark Benioff developed a thing called the data cloud, and it was kind of one of the clouds, and it turned out to be dovetail exactly with what happened with AI. So what people are doing, I think you're speaking to Bill McDermott. He does onboarding, he does a lot of good ServiceNow stuff. But what's happened is for ServiceNow. But what's happened here is that Mark made a series of acquisitions. He made MuleSoft to be able to stitch everything together. He made Tableau to have a dashboard. He made Slack to be able to communicate. And all of these ended up being perfect for AI. I mean, perfect. That's what you need for AI. So a lot of companies are gravitating to Mark to say, how do we use AI to build sales? And he's got
it work,
answers.
Jim? And can you give us any examples? I mean, when Benioff says to you during your interview, we did 1,000 new data cloud customers, and add to that a huge driver for the quarter is Einstein, right? This Copilot technology.
What works?
550 Einstein Copilot deals for customers. What are those deals?
Okay,
can you tell us?
Well, I think if you're trying to sell,
I had the pleasure of listening to this also. I think Jim had an interesting point, but I don't know if I fully agree with the conclusion. He made an argument that you should enjoy this time if you're a bull, because if the Fed's cutting, that's a problem. So that's not true. Yes, if the Fed is rapidly cutting, there's probably something wrong. But if the Fed is nominally cutting, they could be doing that solely because interest rates are falling and the real level of restrictiveness that's needed is falling. So again, if you're at 5.5, think about this. You're at 5.5 as a Fed funds rate. Inflation is 4%. Okay. So now take 4% off of 5.5. What's in between? 1.5. Well, if inflation goes to 3%, now there's a 2.5 difference, which means they could drop rates 1% and you'd have the same level of restrictiveness. That's the thesis, at least. And the Fed's talked about that. So I don't necessarily think it's true that as soon as the Fed cuts, it's a bad thing. Historically, that has been the case when the Fed has blatantly U-turned. Don't get me wrong. I was one of the first people to talk about that on YouTube. A lot of people got mad at me for talking about it. But back in January of 2022, we talked about this idea that the market seems to align with dramatic Fed U-turns. 1987, March of 2003, February of 2009, December of 2018, March of 2020. Those are like your Fed U-turn. Fed U-turning marks the bottom of the market because like poop's hitting the fan, right? And the Fed's coming in to save the day. I don't know that a slow trickle down of rates is that. And so my thesis has been, the reason I came up with the Nike swoosh thesis is because I don't think we have this dramatic crash in the economy that the Fed then bails out by turning the money printer on. I don't know that we have that big of a swing. I think what we're going through is this slow bleed, but now it's like we're starting to get better in the hospital bed, right? But it's like a slow recovery too. It takes a while to convince people that inflation's gone. I read earnings calls, if not every day, almost every single day. And I study companies almost every single day. I get enjoyment out of looking at this stuff. And outside of aerospace and ski resorts, people are cutting prices as much as they can. Either they're talking about providing more value, they're cutting prices, they're repositioning their ads, they're taking more markdowns. There's this idea that, but inflation might come back up. I don't see it, not at least in the company earnings calls. And so that's why I'm investing the way I am. You know, I put my money where my mouth is, and I am investing in the stocks that I think will benefit from an interest rate falling cycle. And I think, you know, in 10 years from now, we're going to look back and go, damn, I wish I bought stocks during, 22, 23, and whatever, maybe the beginning of 24, who knows? So, but anyway, that's just my thesis. Let's look at Salesforce, because they did bring up Salesforce as well. Salesforce did very well in terms of at least their stock performance. What's going on? I don't necessarily know the earnings were that great, but I want to look at it. Intuit had a slight beat. I remember that. I watched that when we had the close. Let's go to the Salesforce numbers. So the Salesforce numbers that came out. Okay, what is this? Adjusted operating income comes in at 2.72 billion versus 264. Adjusted EPS year over year, that's pretty good. Versus a year ago was 140, comes in at 211. That's nice growth. Operating margin comes in 8 basis points higher than expected. That's good. No, sorry, that's 80 basis points. Yeah, that's great. Q3 subscription revenue comes in a little bit higher, 8.14 billion. Wow, could you imagine having subscriptions coming in of $8.1 billion? Wow. Companies are trying to invest in the AI stuff. Marketing commerce missed a little bit. 1.23 marketing. Oh, that's interesting. Software advertising. Is it all the people bailing on Twitter? You know what else is like trending right now? Is let's write this down. Cancel Disney. Let's go to trends.google.com and do it together. So it's like cancel Disney Plus. Oh, I should take this off. Jeremy here, LaChance, says, why are people talking about a rate cut? 4 to 5% should be considered normal. So what do you define as normal? Should the interest rate, like the way you have to define normal is what's inflation. And if the inflation target is 2% and inflation is 1.5%, should rates be 4.5%? Because if rates were 4 to 5%, I'll use your lower number as an example. Let's say we listen to what your comment is here. Okay. We listened to Jeremy's comment here and we said, 4.5 is normal, man. That's that's just historically normal. Okay. So if you have a 4% rate and 1.5% inflation, that means you are crushing the economy with 2.5% of restrictiveness. Is that what you want? Is that the point of monetary policy? Oh, what? Well, the history says that's what's normal. Well, then you're going to have deflation. And maybe that's what you want, but it's not what the Fed wants. The Fed wants 2% inflation. So when inflation is 1.5%, they actually lower the rate below that to raise it up. The reason we've had 40 years of disinflation is because of capitalism. That's the point. You're supposed to have falling inflation when people compete more. How much was a TV when the first TV I ever bought was 40 inches, 1080p, 40 inches, $2,000. Bro, I could get a 70-inch TV for $599 now, 4K. It's insane. That's called deflation. So, this idea that there should be a normal range, based on what? You're just making stuff up? Pull that out of the sky. I'm going to say this. We got to think these things through. Fed Williams. Fed is at or near peak. All right, let's go. Williams for the win. Williams coming out. Let's go. Okay, helping stocks recover a little bit. Williams comes out and gets a few green candles here. Okay. If inflation pressures persist, Fed could hike again. Well, yeah, but they're not going to. Future Fed decisions will be driven by data. That's old news. Sees up and downsides. Okay, so you're saying nothing. Sees GDP at 1.25% for next year. Unemployment up to 4.25. Not great to see unemployment go up because I always worry about potentially self-sustaining that. But anyway. Sean says, well, inflation will come back with a vengeance when they loosen rates. Bro, where was that vengeance when they loosened rates? Here, you ready for this? Where was the vengeance of inflation when the Fed lowered rates in 1982, 3, 4, 5, 6, 7, 8, 9, 10. That's 90. 91, 2, 3, 4, 5, 6, 7, 8, 9, 2000. All the way up to about 2004 and 5 when they actually started bumping rates a little bit going into the recession because they thought things were overheating a little bit. Where was the inflation for the 25 years I just talked about as rates were coming down? I mean, unless you're part of the this time is different crowd, I'm just looking at what historically has happened. Anyway, all right. Where were we? So cancel Disney Plus. All right, let's see here. Let's look at the last 30 days. Oh, okay. So if I go here, and it's clearly a trend up, and let's go cancel Hulu. Let's put these two next to each other. Oh, wow. Yeah, you got a little bit of a pop there. More on Hulu, interestingly. That's very interesting. When I bought my first house, interest rates were 14%. Well, last week? No, just kidding. Yeah, interest rates were definitely higher. Home prices were also a lot lower. I love when Kevin talks about inches. Oh, yeah. Me too. Kevin, the Fed is the problem. I know you don't believe that, but they created inflation. They fight to lower it. Think of it. Bro, you're totally right. Of course the Fed creates inflation. There would be no inflation without the Fed. We'd have rapid deflation. The question is, would the economy be a poop show with nobody borrowing because of deflation? So, all right. Okay, cool. So let's look at what sticks we have left here. All right. So, no, not really getting much of a movement here anywhere. You've got 13 bips on the Qs, 1% on Ulta, but even that's giving up. Tesla's giving up a little bit. Enphase is up 1%. Okay. That makes up for, the other 200% it still has to go. Nvidia is back at 481. Facebook 332. Wow. I still call it Facebook. Etsy 78. All these name changes are crazy. Like, who actually calls Square Block? I don't know. BTC still stuck in that 37 range. Been bobbing around there for a while. A little up here on Trade Desk, sitting at almost 71 again. Slowly climbing back up after those earnings. It's like earnings give you a little reset. It starts pushing up again. C3AI being a 30. C3AI, I don't know, is a sad company in my opinion. The fact that it has a $3.5 billion market cap just disgusts me. Compare that to Owlet, which has a $43 million market cap. HouseHack should just buy all of Owlet. Like, we will just buy 100% of the company in cash. That's kind of weird to think about. It's that small. That's how small Owlet is. We just cash pay for the whole damn thing. That's wild. All right. What else? Just hopping over here.
Still on track to break a 3-month losing streak, best month since July of last year. 8.5% gains for the S&P, 7 for the Dow, 11 for the NASDAQ. We'll get Kramer's Mad Dash and get the opening bell in 10 minutes.
I don't want Kramer's Mad Dash. I want the bell. That's what I want. Okay. Ain't been happy with Disney since they ruined Star Wars with The Last Jedi. Huh. The serious Star Wars fan here. I'm still building the Millennium Falcon. Keep getting distracted by other Lego sets, but we're making progress. The Millennium Falcon is it's not as fun to build, unfortunately. Like some of the parts of it, the layers, they're very tedious and boring, and it's a lot of triangles. And it feels like you make progress somewhat slowly, but we'll get through it. We'll get it done. Yeah. All right. So, yields climb. I don't understand how the yields are going up after these soft numbers this morning. Oh. Bob Iger admitted the company made a mistake by asking Marvel Studios to provide so many series for Disney Plus streaming. I don't know that really addresses people's concerns, but okay. So, yeah, the 10-year treasury is up 3.8 basis points. That's weird. While Eurozone inflation comes down and U.S. inflation softens. Bizarre. Oh, well. So, JP Morgan is somewhat of a bear right now on the market. I was just reading a little bit about, sort of their outlook piece. Basically, they just think it's too early for the Fed to declare victory and that there's still downside ahead for stocks. Oh, there goes my focus. There we go. And yeah, I don't know if they're just bummed because their stock is down or something, but that's just constantly what they talk about. It's constantly this. Take a look at this. Look, they got investment outlook. In brief, we're a little more skeptical, even though Western economies may be less sensitive, rate sensitive than in the past. We expect the long and variable lags of monetary policy transmission are at least part of the better explanation for economic resilience so far. Well, that would definitely require some rapid rate cuts if it ends up being that the lags start hitting us a little harder. But nobody knows. It's the big problem with the whole lags thing. So what else? What else are they bears on? I've seen them be bearish on a few things. I know they're bearish on the Grayscale Bitcoin Trust. They think everybody's basically going to dip out of the Grayscale Bitcoin Trust once an ETF gets approved. Well, because you get liquidity, so it makes sense, and the fees might be lower. So they probably will have to lower fees quickly to try to prevent outflows. Then you've got Jamie Dimon. U.S. president should have a growth strategy for the economy. JP Morgan has a small lawsuit with Elon Musk and plans to win it. Wasn't that about the shares issue back in the day? The options expirations and such? Pretty sure that's what it was. Okay. Don't have our act together on climate change, says Jamie Dimon. Yeah, whatever, Jamie. Anyway, we can keep looking at this piece here while we wait for the market open. So we therefore think interest rates could be set to fall later than the market currently expects. It's so interesting. Everybody's got an opinion on this. Like Bill Ackman, when he flip-flopped, now he's like, oh, the Fed's going to cut sooner than everybody thinks. You can find whatever narrative you want right now. It's extraordinary how the market has swung over the course of 2023. Well, yeah, that is true. Usually monetary tightening causes recessions. And you get that lag. Look at that lag. Well, you got a lag here. Lag. That was pretty quick. Nothing happened here. That's interesting. No recession in 74. And then you had a while to go before you had a recession over here. That's very interesting. You could just keep kicking the can down the road of this recession thing. That's very interesting. Kevin, if monetary policy has outweighed fiscal over the last 40 years, probably. Although the government spends like a drunk sailor, so I don't know if that's necessarily true. Don't you think fiscal dominating now means inflation is structural? Well, I don't know if the first premise you made is true, or claim you made is true. And I don't know. I don't know about that one. I mean, the government's velocity of money is pretty substantial. It's more substantial than any other kind of spending that exists. Some people say it could be as much as 10-1 when the government hands out money. So, and there's no doubt there are definitely stimulus checks going for supercharging, chip building, electric vehicles. But there's a problem because the more money we invest in chips and electric vehicles, the lower prices can go for those. So I don't know if you're right with that thesis. Consider that for a moment. Right now, I feel like an ass, man. I'm sorry. Oh. Right now, if you want to buy an H100 AI chip, you're spending 4 to 5x what it should be selling for. If it should sell for 7-8 grand, it's selling for 32. So the more you invest in chip manufacturing, even though technically that's government spending, theoretically it could lower the price of those chips because now you're able to manufacture more. So I know that sounds like a mind F here, but the type of spending the government is doing right now on electric vehicles, charging infrastructure, EV credits, it's probably just going to accelerate the reduction of prices for AI chips and electric vehicles and solar panels. So I can't say for sure that, and I don't believe and I don't agree that the government spending on those items is definitely going to screw us in terms of inflation. So yeah, I disagree with that. Anyway, that's my take. But it's also my opinion. I don't know. Okay. However, economies so far have coped remarkably well with higher rates. Coupled with signs the pandemic-related inflation is easing, the market narrative has shifted towards the prospect of a soft landing. Bond markets are excited about rate cuts. Spreads are at or below historic levels. Were this to play out, it would represent an extraordinary success for central banks. What have I said for a long time? I said if Jerome Powell can stick the soft landing, he will get his face up on Mount Rushmore. It's been my opinion. Somebody here says, Kevin, what's your allocation to Tesla? Who here has the largest allocation to Tesla? Oh, I misread that. I thought you said my name. Oh, the next person said my name. My largest allocation is to Tesla. And when people ask me how large, I go, yes. It's very large. Nobody's seen anything larger. Except Andrew Tate in his dreams. Oh! But we would urge caution against taking a victory lap too early. It is the long and variable lags in monetary policy that often plague economic forecasts. Yeah, that's a real risk. But I think the Fed's going to be pretty willing to adjust very quickly with rate cuts once they start seeing that hit. Accumulation of government debt, that's true. Mostly because Jerome Powell has told us that before. You know, Jerome Powell's made it very clear that, hey, like, we can always take the printer out again and stimulate very quickly. You know, they say it is like, we have a lot of tools on our tool belt. Trump will fire Powell no matter what. I don't know about that. If he's cutting rates, Trump might love Powell. Let's see how the market opens, though, because so far it's kind of been bleeding down here. All right, here we go.
Yeah, I can remember that August quarter back in COVID times where it took off, remember?
Yeah, absolutely. You know, I got to tell you, Frank Slootman's comments in Snowflake were also interesting. Because Slootman is the one who is basically saying, wait a second, maybe everyone's getting carried away. Yeah. Why don't you rent the cloud with analytics before you get, which has AI capacity, before you go nuts? Because he and Jensen Huang have done.
All right, so the market on that board seemed to be mostly green, like 80% green, but I'm just getting a bunch of red candlesticks here. Not great. So we have, you know, the QQQ coming straight down. Quick reminder as well, after this, we'll be going to the Cybertruck event. Well, after this, I'll do the Course Member Live. And then at about 10:30, I'll start covering the Cybertruck event. It will be on this channel. So make sure you have the notification bell on for this channel if you want to get notified. And I am doing these stock market open live streams every day between 5:25 and 6:45. So I'll set a schedule. So anyway, let's take a look at this. Tesla dropping before the event here at open. That would be interesting. This would be like the first time if Tesla goes red into the event and then let's say it's green afterwards. I feel like it would be the first time you've actually seen Tesla be a sell the rumor, buy the news. Or people are starting to sell the news right now because the event is today, but who knows. Also want to take a look at the 10-year, and then we'll go back to this JPM piece right here. So, but yeah, in the meantime, y'all
lost the lead.
So bond yields on the 10-year up 5 basis points right now. Somewhat weird why they would be up this high. I mean, yesterday they went down to 4.25 even towards the end of the day and just popped right back up. Q is trying to recover while Tesla's not. Yeah, there's the Q trying to recover. Tesla's not trying to recover. Tesla's getting worse. Well, we'll see. You've got Enphase sitting at 0.66. Affirm down a little bit. Affirm's done so well here recently. Intel trying to go green. Nvidia going red. Disney going green. There's so much hate for Disney right now. A lot of people are saying now's the perfect time to buy Disney. But then, of course, then everybody else is like, what? Why would you buy that woke company? It's like, man, Disney was my childhood. But I guess that doesn't change anything if they screw up. So, yeah, there goes Tesla down 1%. And the Qs are working to recover along with Apple and Microsoft and that. So going back here, as existing mortgage debt has also been financed on longer term. Yep, we know that. Many households locked in low interest rates. We know that. This is millions of seasonally adjusted home sales. Housing market stalls. This is a volume crash. Fiscal spending is back in vogue. Yep, that's what we were talking about. CHIPS Act, Science Act, Inflation Reduction Act. True. Forecasting human beings. Yeah. That's very hard to do, basically. Prolonged central bank pause. While we see the current resilience in economic activity as somewhat transitory. Oh, they're calling the resilience transitory. That's not great. The current news is that there are signs of that inflationary pressures are moderating, not only at the headline level, but also in wages. As the labor market cools and the cost of living pressures become less intense, workers are not hot-footing off to new jobs with the promise of higher pay. This change is most evident in the US, but in Europe, we're seeing a similar phenomenon. So this is the quits and wage growth chart. The quits rate is the black line. Oh, yeah. Wow. Look at that. That's a nice, steady eddy decline here in quits. Well, that's good. That's great. How's the end phase wedge look? I don't know. The ding stock just went negative again, so probably bad. Global inflation has also been helped by a lack of a bounce back in China. The weakness looks entrenched as Beijing appears to be struggling to find a new economic engine that doesn't rely on exports or property excess. Yeah, good luck. It's one of the reasons I think China is probably not worried about war right now, because they're kind of economically screwed. Political calendar, of course, we got the election coming up. I mean, that's no surprise. All right, none of this is a surprise so far. Let's jump over here.
There, I think
That was great.
The opportunity.
Right. Well, I mean, we're not going to be typing things. You know, like, think about it. We type in and it like hits some Microsoft thing. And it's like Intel. He thinks Intel's kind of ridiculous. You know, it's like when I spoke, he said, "Just speak to it for heaven's sake." I said, "What? I just speak?" He said, "Just speak to it." I said, "Okay, draw me. I want a Cezanne seascape." Boom. There was no typing. There was no. You're constrained only, as Frank Slootman said, only by your own imagination.
Yeah.
I mean, David, you can sit in the Globe Theater. You can be 1580. You can do whatever you want.
It's really interesting. There's a. Oh, okay. Oh, that's been going on for a few months now. Okay. Oh, that's interesting. All right. Never mind then. Okay. So 4.32, still trending up on that 10-year right now. 4.3 popped up to 4.36 there for a brief second. I want to look at the 5-year break even. What's up, Car for Coin? You got some Coinbase commentary. Hey, you've done great on that stock, man. Nobody can take that away from you. 5-year break even, forward break evens. Okay, all right. So ticked up again a little bit. We're at 2.19 and 2.25 on the break evens. And then let's take a look at financial conditions. Goldman Sachs financial conditions are still down. I'll show the picture. Let's listen to this.
I think we should have some kind of regulation with AI. Now, this tends to cause the AI accelerationists to get up in arms because they think AI is sort of heaven, basically.
You know, I'd struggle to sleep at night because of AI danger. But now I've come to a fatalistic resignation on AI, he went on to say.
Jensen does talk in the New Yorker piece about the idea, look, it can't create that. He's not concerned. He said that, and I know that when they're directly opposite views, I mean, couldn't be more opposite views.
Yeah.
The practical nature of AI versus
it would be great to have the two of them in conversation.
Oh, man.
To really trying to get to the bottom of what his.
Oh, okay. Oh, yeah. So I have the agenda for the Cybertruck event. It's still a little later than I thought. So check-in begins at 1 p.m. Check-in closes at 1:45, and this is Central Time. So Pacific Time, check-in will begin at 11. And check-in ends at 11:45 Pacific Time. And then the keynote speech is scheduled for noon California time or 2 p.m. there. I know because I have my freaking ticket that I'm looking at, but I can't go because I'm sick. I think there's a chance I would have gotten a lot of other people sick if I went, because I I'm pretty sure I got this for my kids. And so if I got it for my kids, it means whatever's going on in the bottom half is contagious. And that sucks. This, by the way, just wear a mask. I love the facetiousness. Nobody with that hat actually means it. That's a cool picture, though. I like it. You're kidding. All right. So, 99.74 on the Goldman Sachs Financial Conditions Index. 99.74 is as low as, let me see here. Let's go across here. Okay, so we're as low as we were in, I mean, we've been here before. We're definitely not as low as we were in the summer. So, interesting. A little bit of a pop there from the summer. Okay, so what else? Car for Coin here says, Coinbase is the custodian for these ETFs, and the fees they're going to collect isn't priced in. How do you know it isn't priced in? Right? If everybody assumes that Coinbase is going to be the victor for these ETFs, but you know, how much are you charging for custody versus transacting, right? Do you think EV demand will go down sharply after the initial wave of EV lovers? I mean, I think it'll, like, EV adoption will probably also be somewhat of a volatile Nike swoosh. I don't want to sound redundant, but you know, I think once people realize that these electric cars are no longer the electric cars of the past, like you know, the Prius on electric, where it's like 0 to, you know, 20 miles an hour in 10 seconds on the electric mode. Like it was slow. I had a Prius for a while. I guess if you stepped on it though, when you got the engine combined with the battery, it was, you know, a whole like 7 seconds or whatever. But anyway, a quick 7 seconds. That's what she said. Anyway, do you think EV demand will go down sharply? Yeah, I don't think so. I think it'll be, like I said, a volatile Nike swoosh of people becoming more comfortable with how great these electric vehicles are today. They're so good. Because I'm a wizard. 10 basis points is their yearly fee. That's funny. Right. Yeah, man, that's interesting. So let's just calculate it. If the custody fee is 10 bips, and I don't know, let's say there's, how much is going to go? What's the BTC market cap right now? 738 billion. Jesus Lord. Okay. So how much of that goes to ETFs? I don't know. 20%? 150 mil? Let's go with 150 bill. Oh, that's a lot. Oh yeah, 150 bill. So you think 10 basis points, 0.001. Okay, that would be, wait, did I do million? Okay, I did million because that was too low. That was 150,000, but I did 150 million. I have to do 150 billion. That's nicer. That would be $150 million of custody fees. Coinbase Investor Relations. That sounds really nice. Let's see here. Third quarter. What'd they make in the third quarter? So transaction revenue was 365. Oh, that was 22. Transaction revenue in Q2 was $288 million. So that would be, if they got 100% of $150 million of, or $1 billion of custody of BTC, that would increase their revenue by 50%. So you're not wrong about that. Well, that would increase their transaction revenue. They also have 334 of subscription and service revenue. So their net revenue would go up by about 25%. If they were so blessed to get a full 10 basis points on an ETF for Bitcoin, which is a spot ETF, I think that number's high. I think you're going to go down on that 10 bips, because What are they offering? What are the fees that they're offering on it now? I mean, maybe, because if the BTC fees are like 0.8, that's an interesting idea. Let's see. I can pull up the custodian list because I have that right here. All right. Let's see. Yeah, they don't list the fees here, but in the individual prospectuses for each of these, they will. 1 to 3% is the allocation that financial advisors will be recommending on 17 trillion of AUM. So you think the allocation to BTC will skyrocket is what you're saying. Because, let's go in the midpoint there. 2% of 7. I can't do that math. Here, I GPT that. 2% of 17 trillion. I mean, I guess I could have just added 3 more zeros to billion. But whatever. So 2% of 17 trillion. Oh my gosh. GPT can't even figure it out. There we go. $340 billion. So that would be saying the Bitcoin market could go up by about 50%. So I don't know. These are a lot of speculative numbers, man. Kathy Wood wants to charge 80 bips. Okay, yeah, maybe custody could be 10 bips then. All right. Kevin, your advice on productivity has been life-changing. I'm busier than ever, but I'm getting so much done. It's become addictive. Oh, that's awesome, man. Yeah, I think that, hopefully people like the gold course. I put a lot of effort into that and try to give my secrets in there, as many of them as I can. And they're going to be even more posted to that. Which reminds me, if you haven't yet, because I want to get some more lectures out, we extended the Cyber Monday sale. We're going to have that expire tomorrow. So if you need a bundle coupon, email us at kevin@meetkevin.com. Sorry, actually, preferably staff@meetkevin.com. And don't copy both, because then you'll get 2 replies. It's a headache. Staff@meetkevin.com. And yeah, happy to bundle y'all. So check those out. So anyway, yeah, as you can see, the Qs are going negative here. Tesla's down about 1.25% on Cyber Day, kind of almost like as if it's planned. Tesla going down on Cybertruck Day. Hopefully it, flips the rumor though and it goes up. So let's play this so we can get to the course member live. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. So you're going to get a pop-up to hit the notification bell for the Cybertruck live stream right when I hit end to this. All right, we'll see you there.
Just close the fucking door. Close the door.